Well, happy Monday. It is March 4th. I want to bring you the latest data here in the Austin metro area. Of course, we're going to start with interest rates, but I want to share with you some headlines to explain a little more about what's happening in Austin and also Central Texas. We're going to look at the latest January data and also share with you current data right now, this morning, just to kind of tell you where Austin is and how we're shaping up as we enter March. So in terms of interest rates, we are above 7 still. We've now been over 7% for about a month. If I come down to this chart down here, this is January 1st. We started the year, this line right here is 7. We started below 7%. We were in the mid sixes, had a little bounce up. It dropped again right when we started February into the mid sixes, but then boom, it went right back up. Kind of the inflation data continues to stay hot, and also the job market continues to stay strong. And yes, that is good news theoretically, but it does put some pressure on the bond market, and that's what's keeping rates up right now. So for all of February and now the beginning of March, we have sat at or above 7%. But it is slowing some buyers down, but it is not slowing the market down. And so what we're seeing is we're still seeing activity. So let's get into that. I'm going to show you some headlines. So these came out Friday through the weekend. So the Austin housing market is just another example of other U.S. markets that are continuing to see strong sales. Austin's housing market is showing signs of heating up again. Significant increase in the number of houses listed and sold January to December. Some of that is seasonal. So again, take it with a grain of salt. January always picks up over December in terms of buyer activity, but still 56% increase in new house listings in January compared to December, and 19%. Sales are up 19% compared to December. So again, some of that's seasonal, but still showing some signs of buyer activity. And if I come down to this article here, this is talking about Cedar Park, named number 4 best Texas city to move to in 2024, according to USA Today Homefront. So Cedar Park was number 4. If you don't know where that is, that's one of our northwest suburbs. It's also probably the highest priced northern suburb, and it feeds directly into a lot of the Northwest Austin tech corridor. And so you have a lot of good school district out there, little higher priced homes compared to the other major northern metros. But if I come down even one more article, New Braunfels is another city, which is more of a San Antonio city than an Austin city, but it's between here and San Antonio. It's kind of the big, it's somewhat of a suburb, but it's a little bit of an exurb on the outside of the north side of San Antonio. Been a very popular destination in Texas for decades for tourism. It's got beautiful rivers and parks. And then you also have a lot of retirees live there, but now it's becoming a little more of a suburb to San Antonio and to a lesser extent, Austin. So New Braunfels also booming in terms of the market. Let's look at some January data just to kind of set the stage. If I come back over here, here we go. So this is from the Austin Board of Realtors, and I want you to look at two parts of this chart. We'll talk about median sales price in a second, but I want you to look at closed sales and pending sales over here on the right. So this is the entire metro. Closed sales in January were up 4.3% over January in 2023. And pending sales were also up. This is the entire metro. If we go to Bastrop County, which is more affordable, sales were up 58%. Pendings are up 45%. If we go to the most affordable county, Caldwell County, sales are up 220%. Pending sales are up 39%. 105%. 39 pending sales there. City of Austin, which doesn't have as much resale, and it's also the highest priced part of the metro, closed sales and pending sales were about flat, about even. So it's not bad news, but it's kind of hanging in there, pretty consistent with both January of last year and this year. Hayes County, which is to the south, Butte, Dripping Springs, closed sales are up, pending sales are up. And finally, Travis County is the only one where we're seeing it down just a little bit. And again, little more expensive part of the metro area. But overall, Williamson County, closed sales are up almost 10%. Pendings are up 5%. So in terms of what's happening right now, the bottom part of the market is really seeing that pick up. The more affordable properties, as we move up the ladder, it is picking up, but just not as aggressive. It's staying a little more even with what we saw last year. Let's look at the sales price trend over here. This is number of active versus sold listings. So this is kind of where we're sitting right now in real time. So this was last year. Typically, we're going to peak out on listings kind of mid-summer. Call it June, July, or August, depending on sales activity. This is how many people are trying to sell their properties and how quickly they're going off the market. Typically, we want to see that bell curve kind of peak more in here, and it just dragged last year because interest rates kept going up. And so stuff wasn't selling, and it just sat around and it sat around and it kept building up inventory even into September and October and even November. Still had more listings than we would have expected. What happens with this big drop off at the end of the year is not typically a bunch of buyers buying the homes. It's sellers just saying, I'm done. I'm taking it off the market. And so that's what happened at the end of last year. But this year, typically we're going to see this bell curve kind of start to climb again. This is listings building up, sellers listing, but it's not climbing as fast as last year. And I think part of that is because we're seeing more pending and closed sales. If I look down here at January and February, this was our low point, January, under 2,000 single family homes sold. Obviously, we can see a little bump up in February of sales, and we probably have not closed out all those February sales yet in terms of agents going into the MLS, marking it closed, putting the data in there. It's going to take another week or two before all that data is kind of finalized. That's typically also why we don't get February data, for example, until late March, because the Board of Realtors needs to make sure all that data gets in there. But what we're seeing is right now we're kind of neck and neck with February on active listings. This number we'll see closed sales. We got to wait for March to happen. But right now we're seeing a little more activity in the market, and that's helping spur up the home price. So if I come over here, this is historic sales price. Everybody wants to know which way is the market going. Is it crashing? Is it going up in value? So here's how I explain it. Typically, if you imagine a little rubber ball, price is like a little rubber ball bouncing upstairs every year. And that's kind of appreciation. Typically, in a normal year, it's going to look like this. You're going to go up in the spring and down in the fall, but it usually doesn't go down as much as it went up. And so you kind of bounced up a stair, and then you're going to do it again. So if we look at the last 4 years, this is the pandemic. This is the weirdest chart you're going to see in typical real estate sales. It's not normal, but this was 2020, and we didn't even have a bell curve. It was just a straight line up because we ran out of homes. 2021, you see a huge spike in the spring. Everybody got exhausted the second half of the summer, but we ran out of homes again. And so the price went up in the spring again. So up in the spring, up in the spring, up in the spring. Even in 2023 with high interest rates, even after a big slump after 2022, we still saw prices go up in the spring and then down in the fall. And here we are, this little jump right there. I know it's tiny, but that is what we're seeing. We're seeing the prices start to go up. We've seen about a $15,000 median home price increase January to February. That is not unusual. That's fairly typical. So we're probably going to see another spring that looks like this. The key is, will the second half of the year be more mild? In which case we might have some appreciation this year, or is it going to be another severe slowdown? And that is what depreciation would look like when it drops more than it went up. And so I'm expecting if things, based on what we can predict right now, I would not be surprised if we have some mild appreciation this year, anywhere from 2 to 5%, something like that. So we're setting up pretty nicely to have a good spring, even with 7% interest rates. So what am I seeing happening in the market right now? I had some clients that I took out this weekend to look at new construction. And in talking with several of the builders, the incentives that the builders are offering are starting to tighten up, number one. And number two, they're raising the prices on their new builds. That tells me that they're seeing good sales activity in the market. They're seeing confidence from buyers, even with the interest rates. They're still offering incentives, but the incentives are starting to tighten up. That means their inventory is also starting to tighten up. So to me, that's a good sign, a healthy sign for the market. And we're also seeing some of the listings that have been sitting around for a while starting to get chewed up. Buyers are making those offers not only on the new listings, which are going pretty quick, but some of those older stale listings from last year. If their price was right and they just simply had bad timing on their listing, we're seeing those start to get chewed up. So I do expect we're going to see inventory build between now and June. It happens every year. Every seller's getting ready for the market. Every seller I'm talking to is getting ready for the market. It's just going to depend. Are they listing next week, or are they getting ready for an April, May, June listing? So most sellers right now are prepping their homes. The weather's getting warmer. They're getting ready for the market. The question is, will demand meet that supply? And over the last couple of years, it didn't. We didn't have enough demand to meet the supply, and that's what makes the price go down. But this year, I feel like we are feeling more demand. The key is, will it match up with the supply? So if you're a buyer right now, you're going to have to be prepared that the interest rates, I know you want them to come down. I'm not seeing anything that's telling me they're going to come down in the next 2 or 3 months because I don't think the Federal Reserve, which is impacting the banking market, I just don't think they're going to make any decisions on their rate until this summer at best. And so just predict in the spring, we're going to be paying, high 6s to 7s for your interest rate. So it's great, plan for that, run your numbers on that, and prepare to talk to your lender about that. On top of that, I would prepare that if you are bidding on newer properties, meaning new to the market, you may have to bid on those if they were priced well. And so we are seeing those properties move a lot faster than they did the last 18 months or so. In this downslide and in this big downslide when nothing was selling, now we're seeing them get that activity. Hope this was helpful. If you want to watch each and every one of our videos, you can check out our YouTube channel at Ryan Kelly Group on YouTube. Make sure to click that subscribe button, and then you won't have to worry about me trying to send these videos to you every week. You'll get them automatically. And of course, if you know someone looking to buy, sell, or invest in Austin, this is the time. We want the opportunity to talk with you, talk about your strategy and goals, and see if we can help you find a great property or sell a great property in the market. Until then, we are warming up. Spring break is next week. And one of my favorite days of the year is coming up on Saturday, daylight savings. We're ending it, and we're getting back to the longer evenings, which I like. I know you lose an hour's sleep. I'm so sorry, but I love having sunlight in the evenings. Until then, check out all this data, and we'll talk to you next week. Thanks.